Hello and what is going on, lovely people of the internet? It is HOOTMONEY here with another video for you guys today. Workhorse Army, Ape Centaur Gang. I am back here making another Workhorse video for you guys, and I couldn't be more excited to be back because I know a lot of you guys have been anticipating my return, and I'm just excited to be back here. So we're going to be going over a few different things. We're not going to be looking at the short-term perspective as much as we are going to be looking at the long-term perspective, and there are a few different dates that we have to look out for in the coming future, including earnings and in regards to their court case. So those are going to be two things we're going to be looking at. We're going to be looking at some of the short interest figures, although that's not as relevant right now as currently shorts aren't down on Workhorse. Shorts are actually in a winning position, at least year to date on Workhorse. So right now that is not as important as much as the fundamentals of the company. However, this could quickly change if Workhorse does beat on earnings. If they do win some of this contract back from USPS, then the short squeeze is back on the table, as if we get a nice price jump, then shorts will be hurting. So anyways, guys, we have to look at the fundamentals, because if we do want a short squeeze to happen in the future, we're going to need these fundamental changes and have there be long-term fundamental value, and we're going to be talking about a few of those catalysts as well in this video. So I hope you guys enjoy. If you don't mind leaving that early like on the video, that would be highly appreciated, as I did a lot of research and I know you guys wanted this content. So anyways, guys, if you want to join that Discord channel, the link is in the description or in the pinned comment section, alongside the link to sign up for public, where you get up to $70 in free stock as long as you deposit at least $1. Now guys, without further ado, let's get right into the video. Alright, my friends, so first and foremost, we're going to be taking a look at the short interest, looking here at short sight, which is the short interest from S3 Partners. You guys can see that over the past week, short interest has spiked up from around 34-35% back up to 37%. So we're currently sitting at 36.96% short interest percentage of free float. So it has been going up over the past week, and we have seen a little bit of a price decline. Now there's a key resistance point that we're going to be taking a look at later in the video when we do this technical analysis. But like I said, guys, right now the short squeeze and this short-term price action shouldn't be what you guys are focused on, as we're going to need those long-term fundamental changes to actually kick off this short squeeze, and I will illustrate that to you guys right now. So we have this tweet from Ihor Dusonis. I can't say his last name, I am so sorry, but we can see right here that this tweet was actually on July 20th, 2021. So we're gonna have to take a look at what the price of Workhorse was on July 20th, 2021. So we're gonna zoom in right here, and you guys can see on July 20th, 2021, Workhorse was hovering at about $11.30 per share, so around that range. And now we are currently looking at $10.83, so it's actually down from that figure. And you guys can see this tweet. He said that shorts are up, so this is at $11.30 per share. Shorts are up $97 million in 2021 mark-to-market profits. So if I were telling you guys that the shorts were hurting right now, that would just be a lie. So shorts are actually in the money right now. They are winning on Workhorse, but that doesn't mean Workhorse is a dead horse. That doesn't mean Workhorse is out, because there are plenty of long-term fundamental catalysts. So this is what I mean, guys. Instead of looking at it as a short-term, short squeeze, make money fast type play, how we were looking at it in the past, we have to look at it as a long-term fundamental play. And this is why I have been averaging down on these prices, because the more I analyze this stock, the more fundamental value I see in it. And I think there's a few key aspects that short sellers are ignoring, at least in the long-term perspective. And it's very difficult to value a technology company like Workhorse, because including their drone technology as well, like there's never been an industry like that before. So it's very difficult to value something like that. But ARK Invest actually made a few estimates on that, so we'll be getting into that as well. And you guys have to see right here that Workhorse has a hidden asset that makes it a buy. So this is talking about the drones that Workhorse has, their Firefly drones, and it's very interesting. And even though the stock price is down, this is something that will give it a big catalyst, and it's over a $100 billion market. So if Workhorse even captures a small percentage of that, this stock can 2x, 3x, 4x, 5x, 10x from this point on. So we're going to be highlighting the key features of this article. The Horsefly, I literally just said Firefly, but anyways, the Horsefly is an all-electric drone that is incorporated into trucks. The drone can carry a 10-pound payload and fly at an airspeed of nearly 50 miles per hour. In theory, a Workhorse truck can drive into that area, then use the drones to swiftly deliver parcels. So Workhorse does have a few competitors in the drone delivery industry, such as Amazon, Walmart, UPS, and those are also potential acquirers of Workhorse. We can definitely see a company like UPS acquiring Workhorse. Another thing to take into consideration that the Horsefly drone has a few advantages over the Amazon Prime drone, and it can carry a 10-pound payload, which is double that of Amazon. So Amazon has a 5-pound payload limit on their drones, and Amazon's drones also launch from a warehouse, so they have a bit more range than the Horsefly drone. The Horsefly drone has about a 10-mile range, and the Amazon drone has about a 20-mile range. So they both have their pros and cons. However, what's really great about the Horsefly drone is that it actually launches from the delivery truck itself instead of it being launched from a production facility. And this is what's called last mile delivery. You drive the truck into the area, and then the Horsefly drone helps deliver some of the parcels. And you guys have to just consider this industry. So think about it right now. You have all these delivery drivers going around everyone's neighborhoods delivering packages. If you go on Amazon, you buy something small. Guys, I bought this facial moisturizer on Amazon yesterday, and this is the box that it came in. It's very tiny, guys. So why would you waste human power to deliver something like that? They have to get out of their truck, walk up all the way to your front door to deliver something so tiny. Guys, this is where drones come in. If they can deliver small items and it doesn't waste human time and effort because, well, it's a drone and it has autonomous thinking, and it can go to your house, deliver the parcel, and then come back to the production facility, to the truck in Workhorse's case, and then boom, you do it again. So this is clearly an industry that will save tons of money for these big companies where they have to deliver these packages, where paying a human to do it just doesn't really make sense. It doesn't really make sense to pay a human to deliver a very tiny package. So this is very crucial, and this is going to be one of the most disruptive new technologies in the delivery industry. And this also brings me back to my point that short sellers aren't really taking this into an account. They did the same thing with Tesla when they don't value it as a technology company. If you don't value Workhorse as a technology company, you are going to be hurting, because they are creating more than just electric delivery vans. They are creating a whole technological ecosystem around delivery and completely revolutionizing this industry. And they're one of the only small companies that is competing with giants such as Amazon, Google, UPS, Walmart, etc. So from that stance alone, I think Workhorse is definitely worth over $100 billion, but it does have to prove itself in the future. On top of that, last year, Workhorse formally submitted a type certification application to the Federal Aviation Administration, the FAA. You've probably heard of it before. The certification process takes an average of 12 to 24 months and is an important step in bringing a product to the market. In the Q1 conference call, so we're going to have to take a look at the Q2 conference call coming up next Monday, Workhorse shared that it had delivered its Horsefly system to a commercial customer. The company also successfully completed 45 test flights as a part of the FAA certification process. The drone successfully passed all 45 tests on the first attempt. So guys, the Horsefly drone is really no joke. It passed all of its FAA tests and likely will be getting FAA approval within the next 12 months as we continue to do more test flights. They're also approved to test out delivery in Ohio, which the article briefly stated. So within the next 12 months, there should be that huge catalyst of the Horsefly drone. And once we start getting that onto streets, there's going to be more demand for the Workhorse vehicles, as well as that's where the drones launch from. So using these drones is a huge catalyst to get the electric delivery vans sold. All right, my friends, so this brings us into some new news that happened within the last 2 weeks of Workhorse. Actually, within the last week, company Workhorse appoints new CEO Richard Dotch. Guys, Richard Dotch has a lot of experience, and we take a look right here at his Bloomberg profile. You guys can see, if we scroll down here, lots of experience at other car manufacturing companies. Guys, he was a board member at these companies right here, board member at Workhorse, well, now the CEO of Workhorse, Delphi Technology. He was the CEO. They worked closely with, I believe, UPS and Accuride Corp as well. So this guy specializes in car manufacturing. He doesn't have the same experience in electric vehicle manufacturing. However, the big problem with Workhorse, and you can call this a bottleneck. If you guys don't know what a bottleneck is, look it up right now. So Richard Dotch has been appointed to solve the #1 problem with Workhorse, and this is the biggest bottleneck to Workhorse's success, and that is their production. Guys, Workhorse has trouble producing these vans. If they are able to ramp up manufacturing of these delivery vans and be able to produce these new vans, they will be getting many more contracts, because right now a big problem for Workhorse is they just cannot produce these delivery vans at scale. So with Richard Dotch as CEO, they will be able to solve this bottleneck in their supply chains and start getting these vans to the market at scale. And here is an awesome video of the Workhorse Union City production facility, and we're gonna skip to some of the entertaining parts, guys. We're gonna move over here. You guys can see this is a part of the Pixel delivery order, so you can see all of those delivery vans being delivered, and that is a very good thing. Now we fly over here. You guys can see this is another part of their production facility, and you can see some more vans right here, some more manufacturing, some more vans over here, and this is just their whole production facility. So if we just take a brief overview, let's see if we can get a good picture here. This is basically an overview of their entire production facility. As you guys can see, it's big, but it's not as big as it needs to be. They have a lot of land, they have a lot of room to expand, but clearly it's not enough, as they do not currently fulfill the demand. And with Richard Dotch as CEO, they will be able to completely transform this whole production. Alright guys, I know the video is getting a little long, but we're going to go over exactly when we're going to get an answer from the United States court. So the answer, as you guys can see, we're looking at basically the list of filed complaints in the United States Court of Federal Claims, which is where Workhorse versus the United States is taking place. You guys can see the answer is due by 8/16/2021, so within the next 2 weeks we should get an answer, and that can act as a negative or a positive catalyst for Workhorse, because a lot of people are anticipating both sides. A lot of people are anticipating that Workhorse will go up on this, and they think that they will get some of this USPS contract, but a lot of people are also anticipating that they will lose this, and either way, that's going to create some volatility in Workhorse's share price. And then again, we have the Workhorse earnings date on August 9th, 2021. So these first 2 weeks of August are going to be very excited if you're trading Workhorse. And they have, as you guys can see, Q2 2021, an estimated earnings per share of about minus 19 cents, which is not horrible. However, that's not really what I want to be looking at right now, as this is not going to be a profitable company for quite some time. We want to look at the revenue estimates. Here we're on Yahoo Finance, okay? So you guys can see that the revenue estimates are about, on average, $6.41 million, which is great. That's up about 7,000% over the year. So that's pretty crazy, especially given that about a year ago, Workhorse was trading much higher than it is right now. You guys can see about a year ago, it was trading at around $18 a share. Markets were a bit frothier in the EV space, as they like to say. But guys, I really do think this doesn't really add up, considering the fact that we're up 7,000% in revenue year over year. So this company is growing like an absolute weed in terms of production. They're not quite profitable, but we didn't expect them to be profitable. So these earnings per share estimates of minus 29 cents, that's honestly not even bad. And it's a lot better than it was a year ago at minus $1.76 per share. So things are looking good for Workhorse. It doesn't really make too much sense that it's down on the year. As you guys can see, it was at $18 a share. I'll show it to you guys again, and we're now at $10 a share. So we're down almost like 45% on the year, while our revenue is up 7,000%. So there's, I see that as a catalyst. And also within the next 12 months, we're going to get that FAA approval. We're going to get more production from our new CEO. So there's a lot of things looking good for Workhorse fundamentally. And this is what I wanted to make this video about, because people just want to look at it for the short squeeze. They want to see shorts in the hole, but that's not the case. Shorts are winning. Guys, we're up in revenue 7,000% on the year, but shorts are winning on the year. Shorts are not valuing this thing correctly. They're not looking at the drone technology. They obviously haven't priced in the new CEO, as that was only a few days ago. So there's a lot of things looking positive for Workhorse, and I wanted to share that with you guys today. I didn't want to look at this as just a short squeeze video, because we have to focus on the potential catalyst for Workhorse and what can actually send this thing to the moon and put shorts in the hole before we start looking at that short squeeze data again. So I really hope you guys appreciated that. I know this video was a lot, but there was a lot to cover today. So if you made it here to the end, make sure you guys leave that thumbs up on the video, subscribe for more content, and that's about it. I hope you guys have enjoyed. Remember, if you use those links in the description, you can sign up for my Discord, or you can sign up for Public, where you get up to $70 in free stock as long as you deposit at least $1. So with all that being said, guys, that's about it. Hope you guys have enjoyed. Peace.